All right. Hey guys, welcome to this week's podcast episode. Today's episode is going to be all about stock investing, equities, financial literacy. I love equities. They have their goods. And the guest I have is Sean Tepper, and he tries to make investing has never been easier. So we're going to talk about his story, and he's going to leave you guys inspired, motivated, and I'm happy to welcome him to the show. So Sean, welcome.
Christopher, thanks for the invite.
Yeah, kind of set the stage, your experience, your background, and we're gonna dive right into the conversation.
Sure, I'll kind of keep it high level here, but I have about 20 years business experience combined with some investing. I built a company in the 2000s, an agency, building tech, went through a merger in 2010 after the recession, and then got into working for large corporates. I did a lot of work with like project management. In parallel to that, though, probably over 13 years now, I got into investing. Long story short, there, I created an Excel sheet with a little help from Warren Buffett, Charlie Munger, another guy by the name of Phil Town, as a way to make investing easier. And I used it for about 4 or 5 years, making returns that were like between 15 and 50% in the market. It was value investing based. Brings me to 2019. I started sharing this Excel sheet with others. And people were like, hey, when are you going to turn this into a software so we can use it? So it took me about a year to build the first version of Tykr. We went live in 2020. It took about 6 months to get the first paying customer. Our platform was far from mature. But with feedback from our customers and a lot of hard work, we've been live 3 years. We have a little over 8,000 customers in about 50 countries. And we're really proud of this last little detail is we have a 4.9 out of 5 on Trustpilot. We're big on our customer service.
Yeah, it's really interesting, and I love this. Like I said, I got my financial freedom through equities and real estate, and
Mm-hmm.
so those are the fundamentals. So, kind of talk about so a lot of these this idea of stock investing, trading, which is better.
Yes. So in our onboarding, like when people join, they get a series of emails like every day, and you can skip and read them all at once. But there's one that's like investing versus trading. And long story short, trading is a job. You are trading your time for a paycheck, whereas investing, you're making money work for you. That's the purpose of investing. Like Warren Buffett, Charlie Munger, they did not become billionaires because they're sitting watching charts and trading all day. So we've got a series of facts, but a big one here is I ask you this question. So as of today, there are about 3,000 billionaires on the planet. How many of them do you think are traders and how many of them do you think are investors?
I figure, I mean, I'm pretty sure over 90% are long-term investors.
All right, so here we go. There are zero billionaire traders. And of the 3,000 billionaire investor or billionaires out there, about 50% are investors, 50% are entrepreneurs. So some would argue and be like, right? Like some would say, well, could they all be investors? Well, technically, entrepreneurs invest in themselves. So
Yeah.
there you go. There are zero billionaire traders.
Yeah. Yeah. It's interesting because what do you think about this idea? Because I've always advocated for long-term investing and just
Yeah.
kind of just buy and hold. But with recent volatility, you can actually capitalize on some of that volatility, short-term trades just kind of for cash flow. It's not going to make you a billionaire, but at least it, can add some extra side income.
It is very hard. Like we have a statistic in our onboarding. It's like 99% of traders lose money because it's so hard to time your entry and exit points. It's
Yeah.
much better to value invest, Warren Buffett style, like invest in strong businesses and then keep investing. But yeah, like trading, it's I've got a podcast too, and I've interviewed people that do like stock trading, crypto trading, options trading, forex trading, and commodities trading. The only trading strategy that you can make some money based on statistics is forex, but you're investing about 10, like we're talking 10 to 12 hours per day because you have to hit multiple time zones going from Asia Pacific over to Europe, over to the US. It is, in most cases, you're not losing money, but I guess you can feel good like making,
Yeah.
maybe a few bucks a week, but and that's as good as it gets.
Yeah. It's always like I said, I'm a value investor. I just,
Mm-hmm.
the most common question is like, because there was, these people, you hear these people on TikTok and YouTube's, they're like,
Mhm.
yeah, I made 20K, 30K this month trading, and most of the time you lose, but you know.
So here's a quick story. I'll keep it really short. But my tax guy, he wouldn't give me the name of the person, but he's like, yeah, one of my clients made close to $1 million. No, it wasn't $1 million. It was $20,000 last year trading.
Yeah.
But how much do you think he lost the previous like 5 years? And he was like, he inherited a bunch of money. He lost like over 5 years, it was close to $5 million.
Oh, wow.
So $5 million in the hole,
Yeah.
but then $20,000 plus. And he felt good about that. My tax guy's like, you gotta be kidding. You're proud of that? It's just
Uh-huh.
how some people can just burn cash. It's
Yeah.
baffling.
Yeah. Yeah. It's interesting. So here's another question I get often is stock investing versus real estate, the
Mhm.
good and bad.
Yeah. So I'll kind of break it down into three categories. With building your wealth, you will actually build your wealth faster with stocks because the appreciation of good businesses is faster than real estate. However, investing in stocks does not produce passive income. You can invest in dividends and pay yourself a dividend every quarter, but if you want more consistent passive income, go into real estate. So my community, we love real estate, but it's like weigh the pros and cons. You want passive income, go into real estate. You want to really accelerate your wealth and see that money, little delayed gratification, go into some strong businesses because you're going to accelerate your wealth much faster.
Yeah. What about selling covered calls and covered puts?
Okay. We do support one option strategy. You could do covered puts, but we do prefer cover calls. Essentially, if your audience doesn't already know, you want to buy like one contract. I did an example today with a few customers on Caterpillar. I'm like, let's say you buy one contract of Caterpillar, which is 100 shares. Their share price is like 247 today,
Yeah.
which is an investment of about $24,000. And then you sell a covered call against it, and you can make a few bucks if you sell it for a profit, or if it goes down, you collect a premium. So either way, you make money. But I tell people, if you really want to make some passive income per month, you should be expecting to invest probably between $50,000 and $100,000 minimum, which I raise the question, opportunity cost. You could take that, let's say $100,000, put it into some strong value stocks. It's going to outpace that, let's say $1,000 to $2,000 a month by a long shot.
Yeah. The other, great question. And then the other question I have recently is sectors, is because if you look at the Nasdaq, last I checked, it was like up 40%.
Yeah.
S&P and Dow Jones were like 10% or something. And
It's 16.
yeah, I mean the and if you look at like the major like top gainers, it's like what they call the Magnificent Seven, and then the others are just kind of stagnant or down. I'm sure it's like, I think November, December, you have,
Mm-hmm.
the market is up a little bit. So, what is this? A lot of people are starting to say, oh, allocate a core position in like Apple and Amazon and Google, and then kind of your to supercharge, there's like Tesla, Facebook, Coinbase, all these. What are your thoughts on that?
So I want to, for your listeners that don't know, the Magnificent Seven is a new name that has been coined here. So this includes Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. So within our platform Tykr, actually, most of these stocks here, it's really Amazon doesn't really check out right now, but most of them are actually really, really well rated. And the moral of the story is, sure, they're hot names, but these are businesses, and this is what we teach our audience. You want to invest in businesses that have multiple streams of income. They're well diversified. So if one leg of the table is pulled out from under, it can still thrive, no problem. So yeah, they're hot names, but they are also really well diversified business models, multiple scalable streams of revenue, and they happen to be financially strong companies in Tykr. It's like they are the Magnificent Seven without a doubt.
Yeah. 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 So yeah, Mag 7. And then the other, like, for example, like people are like, okay, I don't want to invest in tech. It's too risky, too
Mm-hmm.
volatile, interest rate risk. Although I think kind of interest rate cycles kind of kind of peaked now. But like what companies should people be looking at? Like, kind of like Costco, BlackRock,
Great example.
McDonald's, all that.
Yeah. To touch on your comment on tech, you're right. Like tech, and we saw this, it was actually November of 21 when the market really started to nosedive. Three reasons, I'll keep it short. Russia, rumors of invading Ukraine is number one. Two is the Omicron variant of COVID. Number three is that's when inflation started to rise. So it was like this triple threat. We went into a recession. I would call a recession. Two consecutive down quarters are recession. We were there about a year and a half. But anyway, tech stocks feel the pain the most. They can go way down, but if you can withstand the roller coaster ride down, you can make very big returns in the long term. So if you can't really stand the roller coaster ride, then yes, look at some other stocks. Not financial advisor here, but I'll list a few that might be options to throw some stock shares into. Costco's great. They've got the membership model built onto their model, which is high profit margin. I like Modern Golf. I play golf, so I like Modern Golf and Callaway. That's a fun model. I don't know if you know much about Top Golf, but they you bring families in, rent a bay for an hour, order some cheeseburgers and fries, have a beer too. It's great. So that's fun one. There's Rollins, which is they're popular with like pest control. I think termites, and you're in Texas, so you get it. Like Southern U.S., you've got insects. You got to take care of it. Rollins owns everything from Orkin to whatever. So those are just three examples of non-tech companies that they're decent.
Yeah. It was interesting because the first time I got into Costco was in 2012 or this, and then I was like, man, so many people are here, like, and they had that membership model as you. And I was like, man, this got to be a good. And I was looking at their dividend, and back then it was like less than 100. I was like, this is a good, good bargain if you're valued, just hold it, and it's like it's done very well. So.
Great choice. Yeah, that's a great non-tech stock because it's like the big warehouse play, coupled with the membership model. That's a lesson learned for any entrepreneurs out there. If you can create a membership model bolted onto your business, it's a smart play.
Yeah. Next question is, there's this, you mentioned hype. There's hype with tech, hype with crypto, Bitcoin, all these things, and then FOMO, right? So you talk about how to control your emotions. Kind of talk about that.
So one of my favorite case studies here is a guy by the name of Ronald Reed. He was a janitor that built up a portfolio of $8 million. The question is, how does somebody who's making close to minimum wage become a multimillionaire? Well, the answer is controlling your emotions. And what he did, this is brilliant, is you buy strong stocks and you keep buying more. I have to say this, a lot of new investors worry about as soon as they buy a stock, their next question is, okay, when do I sell it? That should not be your question. You want to be like Ronald Reed, and you want to buy and then buy more. And you would keep doing that. You don't want to miss a month. You don't want to miss a paycheck. You want to keep buying more. And it's really the resilience. You do not care what the market does. And I tell people this is kind of, people look at me like, what's wrong with you? I'm like, I do not invest in the stock market. I invest in businesses that just so happen to be in the stock market. Yeah. So in other words, I do not care what the market's doing. I just keep investing like Ronald Reed and Warren Buffett and Charlie Munger. Who cares what the market's going to do?
Yeah. It's just basically, dollar cost average, just put it in, set it, forget it. Track the major indices. That's kind of the safest way.
Yeah.
High savings rate. Yeah, it all comes down to habits. It's just basically financial habits, and it's not rocket science but
although people make it out to be, but you're right, it is not rocket science.
Yeah. So the kind of question is we talked about dollar cost averaging, and so kind of talk about how much should people start with, how much should they be investing in every month, what should they be looking for, and then what happens if some people are like, oh, I don't trust the stock market, I'm not going to invest in stock market. Talk about that as well.
I'll hit on that right away, actually. So to give you context, over the last 100 years, there have been about 19 bear markets / recessions. Some people debate that could be a little higher, a little lower, but only 19. The average duration is 9 months. That tells us that they don't happen often. And when they do, they don't happen very long. They don't occur very long. So this tells us that you are typically pretty safe. If you invest and you think long term, don't try to sell tomorrow, but you think long term, your money is safe, especially if you're investing in strong businesses. So that's one answer. Number two would be, how much do you start with? This is like Tykr, give you context, like 80% of our audience are complete beginners. They've never invested before. They hear about like stocks from a friend or YouTube or Reddit or whatever. Where do I start? So we tell people it's like that feeling you're like a little kid jumping into the swimming pool the first time. Like I remember that moment for myself. It's like you jump in the deep end, you're scared as can be. But then after you do it once, it's like, oh, this is not too bad. So you want to start with like between $100 and $1,000. And your objective, as we tell our audience, is not to build wealth or get rich. It's to increase confidence. That is the number one word in our platform everybody cares about, is confidence. And that's it. Just go out, buy your first stock, because after you do it once, you realize like, this is actually pretty easy. And then go into Ronald Reed mode, Warren Buffett mode, and keep buying more those strong businesses every month.
Yeah. Yeah. And kind of as we come to the conclusion, if people want to find out more about Sean's work, all of his resources will be in the links and show notes. But talk about like Tykr. How does it reduce risk? How can Tykr make any beginner an expert? How can they get started,
Sure.
learn, etc.?
Yeah, so people know like Tykr is not a broker. A broker is where you, like a TD Ameritrade or Robinhood or Fidelity, where you connect your bank account. That's where you actually make your trades. But none of those platforms teach you like, hey, what's a good stock? What's a bad stock? Like, is Tesla good? Is Tesla bad? Is GameStop good? Is bad? You will know the difference as soon as you get into Tykr. You can look up really any stock. And then it teaches you everything along the way. Our education that's a big focus. So like, when do you buy? When do you sell? How much should, I know that's one question I breezed over earlier, is how much should you invest every month? We recommend between 15 and 30% of your income. If you can't get there, that's okay. Start small, but work your way up. But it teaches you all those things all along the way, how to reduce risk. And essentially how it works is, I won't get into too much detail here, but we look at the income statement, cash flow statement, and balance sheet of businesses over the last 5 years. And we want to see, like, you'll get this, you're an entrepreneur and investor. We want to see numbers like the revenue increasing year over year and quarter over quarter. We want to see the net income, the profits. We want to see the debts decreasing. We want to see the assets increasing. It's like we do all that automatically, so you don't have to manually do it. So that way, like, hey, is this stock a good stock, or should I run for the hills and look for something else?
Yeah, I love that. How can people contact you, check out your work, follow you on social media, and check out your products?
I always send people to 2 locations. So go to tykr.com. It's tykr.com, tykr.com. Second location would be the podcast, Payback Time. If you're interested in like real estate investing or like building businesses, investing in the market, we cover a wider breadth than just stocks. It's kind of like anywhere you want to build wealth, it's like we're your place. So yeah, go to Tykr or check out Payback Time.
Yeah. And for all the audience out there, let's thank Sean for a really engaging conversation. Again, stocks, it takes, do your research. This is not advice. We're just discussing, and all of his resources. Be sure to check out Tykr and follow him on socials, give him a like. And with that, thanks so much for coming onto the podcast.
Yeah. Thanks for the invite, Christopher.